recently watching Shark Tank and I think I'm going to start investing in startups. The return on investment in them is insane.
You know you're not a shark and you cannot invest in startups like that. You're just a normal person.
Actually, even normal people like us can invest in startups.
Really? How?
Yes, you heard it right. All the startups you see, which you really liked and wanted to invest in, you can do it too. You don't need to be some rich, successful entrepreneur to do so.
Before getting into investing in startups though, let's learn a little about them and if they are right fit for your investment.
Firstly, let's understand what exactly a startup is and how it's different from regular businesses.
Startups are essentially visionaries who don't just want to create a product but make an innovation and bring about a revolution in the industry or the market. Small businesses, on the other hand, build around an early established idea, not aiming for a revolution.
Next, startup is very growth focused, aim to grow at substantially quick rates. Small businesses, however, are very conservative. They tend to focus on more profits and sustainable growth with less risk.
Speaking of profits, during the initial years, most startups aren't even focused on profits. In fact, most of them incur heavy losses during the initial few years. Small businesses, however, are more cautious and focus on profits over expansion.
So why would anybody want to invest in startups if they make losses? Why do venture capitalists and angel investors invest millions into startups? Let's find out.
Startups are a high-risk, high-reward game. While an investor has a potential to double his money within just 1 year, there's also a chance of the investment falling down to zero. The investor takes a bet on the idea of the business and the founders believing that the idea is revolutionary enough to become successful in the long term.
Well then, if the idea of investing in a startup sounds interesting to you, let's get on to how you can invest in these startups. There are various stages to a startup investment. Based on the current position of the startup, these include:
Firstly is the pre-seed funding round. Most of the funding in this round comes from the founder's own money or through friends and family. So if your friend or family member has a great startup idea, this could be your entry in the world of startup investing.
Next is the seeding round. In this round, founders look for huge investments in exchange for equity in their company. Funds in this round are usually provided by high net worth individuals.
Then comes the Series A, B, C and so on rounds. Usually, beyond Series C are raised in case there is a need of final push before the last stage, which is the IPO.
Finally, the initial public offering or the IPO stage. This is where shares of the company are open to the public. This is typically when investors from the previous rounds take their exits depending on profits or losses.
Well, these are the stages of a startup funding. And unless you are a friend, family member or high net worth individual, you won't be able to invest in the early stages of a startup. However, there are many investment and crowdfunding platforms such as Seed Invest, WeFunder and Funders Club that allow you to invest in various different startups.
Venture capital funds works in a similar way to mutual funds, pooling investors' funds and investing them in startups. However, they are restricted to certain institutional investors due to the nature of their investments.
Finally, one can wait till the release of the IPOs of the startups as the idea has been proven by then and is easily accessible by everyone. This is usually the stage where most individuals invest into startups.
Well then, that was all about the world of startups and how you can invest in them. With this guide of investing in startups, we come to the end of this playlist, covering all the different avenues of investments and how you can invest in them. Stay tuned for more exciting playlists coming soon. Until next time.